Hi, in this video I'm going to cover the importance of using multiple time frames in your analysis and to trade with. So why you should be using multiple time frames. Now I'm showing you an example here of the euro dollar from today's trading and what's actually happened earlier on. Saw this quite sharp buying coming through at 130, pushing up there, pulling back, retracing. Now a lot of traders will be looking to be buying this, I'm sure. It's the sort of natural reaction when you're seeing these sort of action and this price action going in there. Particularly short-term day traders will be looking at that and thinking it's an opportunity. But the point of least resistance, or least support as it may be sometimes, is the root of trend. Now I could call this following the trend, but all you're really doing, you are following the trend, but you're looking through the time frames, the different higher time frames, to see what the trend really is. And this may actually help traders trade on the right side of the market moves. Now we can never be right all of the time, but being short on this euro dollar, for example, would seem like a logical place to be when you're looking at maybe this chart. But when you start looking up the time frame, so there's your 15-minute chart, your 60-minute chart is still looking quite short there. Your 4-hourly chart, oh, that really does look bearish. Your daily chart, yep, that's pretty bearish there, and bearish beforehand. It's needless to say the weekly chart is going to show us that same bearishness. And well, just to finish things off, a nice monthly chart, and you can see that little bit more detail. Yes, it's come back to a trend line here, but what's the market doing? The trend is down. So the trend is down on every single time frame I've shown you here, which would make logical sense to be waiting for retracements and selling into retracements. So things such as this, moves such as this, maybe if you're an intraday trader, an opportunity to sell. It seems that I'm a bit alone on this, I suppose, at times when I look at things like the sentiment of traders. This is the euro dollar, and when you look at the average, there's 72% of traders' money sitting in there bullish, on a bullish basis. They're on long side. And even the sort of big brokers like Oanda, 64% on the bullish side. Okay, you sort of expect it with my FX book to a degree, because, and Fibbo if it's there, it's not there. But some of these, because they are, I don't know, very weird accounts, and yes, these are funded accounts, but they do tend to show extremes. But it may be explaining why retail traders, 80% plus of them, lose money, because they're sitting on the other side of this market. Now, why would we want to then ignore all of the time frames where they're so well aligned? Of course there's going to be bounces, but where's the big money made in these markets? And you just need to sort of go back up the time frames and look at some of these moves. And yes, there was a decent move there, but how many people would have got in bang at the bottom of this retracement here? And how easier would it have been to be looking, if it gave an opportunity, to be selling into this market move somewhere, if it gave an opportunity, and then playing the move to the downside. So as you come up the time frames, you just look at where the big momentum is. The red bars are much bigger. I know it's in simplistic terms, but that's what we should be looking at, and the traders should be looking at in terms of using the higher time frames, looking where the big momentum is, and coming up the momentum or right the way through and selecting against that. So it is a bit of a video on trend and higher time frames, but it's about putting your trading style together. Now, one final thing I'll just show you, because we've got a great example of the pound Aussie. Let's just bring this today. I was looking at it this morning, was looking at it yesterday actually, but well, what we've been seeing is this. So it's been rallying on the 60-minute time frame. In fact, if I think if I bring it to the 4 hourly, there we go, we can see the rally that's occurred there. Now, yep, it's brilliant. It's come up to some previous highs, found a bit of resistance. But what am I looking for? I'm looking for a short. Why am I looking for a short on this market, and why was I looking at a short yesterday from this market at some stage? Well, because of the bigger time frames. This is the 4 hourly. Look what happens when I click the dailies. Now it all starts to make sense why we should be looking towards the downside on this pairing at the moment. Yes, I'm going to be wrong at some stage, and but the momentum of the moves, again, look at the biggest bars, they're red generally. Yes, we get these sort of bounces and dead cat bounce almost, and then it rolls back over. This is a daily chart. Come to the weekly, you'll see less of those big green ones, in fact none on the existing move. It's all red. There isn't a slightest hint of green. And yeah, even coming out to the monthlies here, yes, it's probably not as obvious a downtrend as what we're seeing with the euro, for example, but it's still a downtrend, and we can sort of agree. We can look, we can see where's the support on these bigger time frames. Yes, we're near a point of support at the moment, for example, and we've got further support to come if that gets broken later. We've just broken through some support. So looking up the time frames, not only does it give you the points of okay, might look for some profit taking, or it's not a good time to actually take the trade right yet, might just wait until it breaks down, but it's used to give you some good guidance and to keep you on the right side of the trend itself, because we've got better chance of making more money. So there we go. It's why it's so important to look at multiple time frames to trade with and for in your analysis. I hope you find the video useful. If you do, please give me a thumbs up, and if you're not subscribing to my channel, please do so, and you'll get many more videos like this. Take care. Bye for now.